Welcome to the Full Tracy Money Leader Commentary. This is Owen Tracy. Recording is 3:22 p.m. That is Central Time. Today is October 18th. Well, I thought we'd kick off with gold because it's continuing to rise. That's despite the fact that we've had downward moves in both stocks and bonds in here today. So the 30-year yield in the USA is at a new high. Gilt yields are starting to firm inside their range. Gilts have been outperforming the majority of other sovereign bonds, particularly in the Western world for the last few months, but that might be beginning to end. Then Country Garden looks like it's going to default, and that's going to wipe out a big chunk of the emerging market dollar bond market. So obviously that's going to impact default rates, even though it's one issuer. They do have an awful lot of outstanding debt. Then when we think about what else is going on here, well, geopolitical tensions continue to rise, particularly with the argument over who bombed the hospital in Gaza. The thing that really popped into my mind is what Winston Churchill had to say about a lie traveling the world before the truth has got its boots on. The one thing is clear is that whichever side one supports, they're going to hear whatever they want to hear. And when you have the USA sending a second carrier group into the region, and you have the president of the USA touching down in Israel for several hours today and talking to politicians, well, they're obviously trying to dissuade Iran from becoming more directly involved or any of its proxies in the region. And it's an open question as to whether that can be avoided. There is absolutely no question that the civilian toll is going to rise. And that's absolutely inevitable in this kind of environment, and particularly when rooting out Hamas is going to require door-to-door fighting. So when we think then about why gold might be rallying, well, I don't think it's much of a mystery that it's rising because of geopolitical tensions. But the dollar is also quite firm today, and we've seen downward moves in a fairly substantial number of commodity-related currencies. Now, that is despite the fact that with the stress in geopolitics, oil prices today popped higher, but then pretty much finished unchanged, other than the fact that they had gapped higher earlier today. And then we've seen weakness coming through in several currencies. So with oil prices firm, gold prices firm, and depreciating currencies, it means those those two commodities are going to be appreciating in value in a whole swathe of global currencies, and that then also helps to create demand. So there are certainly lots of charts to pay attention to.